a talk from Jonathan Hatchett. ASIC is a man who needs almost no introduction, one of the hardest working public servants that we're lucky to have in our government. We will then be moving into a panel, but we do have a 1:30 hard stop. We will be trying to switch over to run the Zoom for the next event at 1:30 here. So anyone who doesn't want to rush down to try and make the 1:30 event is welcome to stay in here. And we might have some mingling at the back and obviously keep everything muted for our attendance on there. So without further ado, I'll hand over to Jonathan.
Thank you, Michael. So today I'm going to be speaking on some of our observations in happening in the innovation space. This has been going on, says something ASIC's looked at for well over 5 years now. I've been in part of that period. Firstly, for those who don't know, ASIC is a conduct regulator. We're focused on certain conduct that's set out in the Australian Corporations Act and related laws around financial services. That's our role. This is what we've been asked to do now. So we have a range of different tasks that may include. One of the areas is the Innovation Hub, where we want to focus on today is where we try and engage. We try and help you navigate the regime, understand the regime, and to help try and build trust in that regime, why it exists, what the benefits of it are, and how you can actually utilize the regime to try and execute your different business ideas on tables. What in particular I wanted to try and make is some of the observations, because we do have a second panel from ASIC later on the week going through some of the more detailed policy areas, potentially. Some of our observations on innovation more broadly, as well as some of the challenges that play out in the sector. Now, from my side, who I am, I've been doing this, as I mentioned, for some years with ASIC. I also do academic teaching in law through RMIT. I speak at Automation through London School of Economics, and I teach in data science with CMU. Now, in today's capacity is purely on the ASIC side, so just to give that clarity, I did want to try and cover off some of the challenges that I see across the sector more broadly. The main ones are, there's a lot of interest in this sector. Obviously, there's a lot of interest in the Bitcoin focus right now, but there's still steps that need to be taken to try and capture that benefit for Australia and to deliver what you want to do in this country for your businesses. There are many, many great ideas. Funding is something that people often raise as a challenge though, and that isn't necessarily part of the regulatory regime. That is potentially something that needs to be worked through from a commercial side. We can help you understand the regime, but that is separate to the funding side. And then there's certain issues around when it's inability of some people to really deliver what they want to do. And what I mean by that is, in the 600 odd entities we've provided assistance to, a lot of them come in and really truly struggle to articulate what they want to do. This is one of the challenges that particularly comes up in this community. You can have really brilliant technology, but often what you're delivering is a software solution, some sort of robotics, some sort of system to someone else as your client. Now, some of you will be setting up your own businesses, but then you're selling to other clients. It'll be wholesale, retail, whatever. Even if you're a reg tech, you need to be able to explain what your business solution is and how it will work with what your client needs. This is one of the challenges that we see from time to time. Because of those 600 entities, there's probably a lot more who've sought assistance from us, and we've had to either decline them or try and work with them for extended periods for them to try and just articulate what they're looking for. It's one of the biggest opportunities we have right now is all the interest in this space. To maximize the benefit you can get from it, you need to have that clarity. I say this both as someone who works in ASIC, but also someone who's trained in industry. I used to even do lobbying prior to working with ASIC. I can see there are a range of factors that are coming into this space, and you need to try and make it very clear what you want. It is definitely been stepped up in recent times. Steve has done an incredible job driving this interest in this area. Chloe's done a lot of work on the blockchain roadmap, I can articulate correctly. But fundamentally right now, particularly obviously from the side we're coming from, financial services, we are trying to see how you can deliver the systems we want to do and do it in a way that understands the existing regime. Now, we may say this changes to the regime. We are open to discussing things with you. We are open to relief. We have regulatory guide number 51, encouraging people to look at this sort of area if you want to see small areas of relief. There are, of course, broader topics. That is something potentially for government and government policy. So I'll just leave that with the government as their area, what they want to do and how they want to do something. You can, of course, assist them to understand what your needs are as an industry and how you can support them. But what I really want to focus on in terms of what you're trying to do is to maintain the trust and the confidence in the sector. We have been going for some years in this as Australian sector as potentially being one of the hubs in Asia and being a potential link. I used to be sent overseas regularly to try and work with foreign regulators to try and explain our regime.
Just be a little louder if we can.
I will try. That sounds a little bit better. All right, I'm hoping everyone on Zoom, you didn't miss too much of that. Short version is trying to build the trust and the confidence in this economy. You want to deliver this in a way that is efficient, but you also want to ensure that you don't compromise the system as a whole. We've spoken about this many, many times. There are many people in this sector. What I would urge you to do is understand both the traditional entities, what their focuses are, and why they are maybe raising issues, as well as what the regime does and how it works. The reason I say that is you may always want to see different changes or different nuanced elements that may suit particular needs, and there's obviously lobby groups and other advocates who may facilitate that. But equally, there's a lot of people who come through to the Innovation Hub who will simply say, we want to do this and the regime doesn't work. Some simple examples was, or previous ones, initial coin offering phase, I regularly would have conversations with people saying, I'm not selling shares, I'm selling parts of a company. And it's not a company in the traditional sense, it's a company listed overseas. So, well, there's a range of things you're saying there. You're telling the regulator fundamentally, you're setting up a managed investment scheme, we're setting up a company, and you just don't know what the shares concept is. And often the arguments that were presented were around the technology. You may have the best technology, but it's similar to saying that I've got better technology. It doesn't mean that the technology's use is necessarily going to be different from what someone else is doing with the technology. So this is one of the big challenges that I encourage people to think about when they articulate different models to us or to when you're dealing with your clients. Because I've seen a lot of packs that have normally be sent to the angel investors, the VCs. The technology discussed is potentially incredible. The ideas represented for the country can be absolutely brilliant. But if you can't explain what you're actually trying to do in terms of conduct, that does undermine you in terms of trying to facilitate engagement. And it makes it hard for people like ourselves to try and give you the assistance we want to give you if you can't explain what your actual needs are. So this is something I'll be strongly encouraging people to engage with. So using the ICO example, that potentially could fall into the IPO regime or it could fall into the managed investment scheme regime. These are different options that already exist. And often a lot of people in this space will say, well, I can change my chain or my distributed ledger just slightly to try and avoid that. Well, you could have just built it to comply in the first place and executed it, subject to whatever small changes that may need to work within that, to fit within the regime. Again, something for the industry to consider how you want to move forwards. The other one I wanted to raise is that there's a lot of people in this space who are very, very much working to try and deliver help, to try and work with these people. There will always be some people who are conservative, they may be more cautious, they may be hesitant to try and support innovation at first. Everywhere I've worked, there's been different people with different perspectives. I'm sure that's going to happen in this space as well. So be mindful in how you engage. One of the things I was actually thinking about over the weekend when preparing this speech was there's a speech from Justice Kirby in 1999 talking about the OECD privacy principles. Obviously not with this concept, but the interesting bit he mentioned was, firstly, there's a focus on, or he was mentioning the focus on the law following trade and philosophy, following trade. So that is one of the focus that will happen in this space, I believe, as well. It's a useful analogy to see how the privacy regime is developed compared to how this regime may develop. Another factor in this space that I'm very mindful of times, I'm used to it still faster, is to think about how these areas will work with people. Because often what people are dealing with in this space is a people issue. We can help you navigate the regime. We're happy to spend time with make senior staff available. We want to do the engagement. We facilitate overseas engagement. We will facilitate engagement with our regulators as long as you can explain what you're doing. But you need to be able to give that clarity. And you need to be able to work with people who may have different views to your own to come together to try and understand what their concerns are and how you can work with them. So given the timing, and we're now, I believe, 10 minutes in, shall we go to the panel? I won't go into too much more detail.
Well, excellent. If you'd all join me in thanking Jonathan for his excellent. I'm going to invite the panelists to take their seat. We'll just have a moment of shuffling some things around. Hi. Oh, Justin got the dead chair.
Try not to move.
Excellent, and hopefully our sound is all right. Thanks for bearing with us the technology that we all continue to use a lot more. It's always ironic in blockchain and technology events when something is a little squeaky. Jonathan obviously needed no introduction, and just to introduce and go through our panelists. Jemma Xu is from RedBlock Capital, which is a China-based digital asset advisory helping global blockchain projects expand, particularly into the APAC market. She's also an active investor in blockchain projects, from a full stack perspective. So we're looking forward to hearing some really useful insights from what Jemma has seen overseas in particular, and how we can look at the innovation piece in Australia from there. Kevin Saunders, I've known for quite a while. He's part of RedBlock Capital and a co-founder of Non-Correlated Capital. I believe we have a couple of NCC guys in the crowd. That's a business that's a trustee for a number of wholesale digital funds and has been involved since 2017 in some of the earliest wholesale digital funds. So he also is involved in the fund administration side of things, and has really interesting insights into how that space has developed and how innovation has been addressed there. Chloe White is someone who almost needs no introduction. She's come in hot from a previous panel that she's been on, and we're very lucky to have her here as well. She works tirelessly in the blockchain space from the Department of Industry and is blockchain lead on the National Blockchain Roadmap. And I don't know when she sleeps. At some point, Jonathan and I go to sleep, but then, well, actually, sometimes you're up even later. But yeah, she's really tirelessly hardworking and an absolute fantastic panelist to have here. And last but certainly not least, Justin. Now, is Justin caught by our excellent?
Can't do that.
Justin is the CEO of Lygon, which is one of the most exciting, I think, Australian blockchain projects that's out there. And people might have seen some press on them in previous pilots that were run, and a bit of a relaunch of the main product in February. They're a blockchain digital guarantee company, which has the interesting quirk of having very major Australian banks on its cap table, and also as suppliers and participants in the network, which is a very interesting piece. So we're looking forward to some comments from you about dealing with corporate Australia and traditionally conservative businesses. So I suppose kicking off, because you did have to wrap your speech very quickly, if you had a 5-second takeaway from your speech, and I'll invite the other panelists to give their main takeaway from Jonathan's speech as well, just to make sure they weren't chatting on the sidelines. What would your 5-second takeaway be from your speech just now, Jonathan?
The main point I'd be encouraged people to is engage with us. We can help people navigate and understand the regime. We can't necessarily drive your business, but we can help you understand where you need to focus, how you want to focus, and what you want to do.
Well, yeah, I think for my key takeaway there is that from a project perspective, you'd explain very clearly what you're doing, and not just the tech part, but I think more importantly is in terms of your structuring and how you think your various stakeholders actually benefit, or what are their responsibilities in your network. I think that would help regulators to really understand exactly what's required in terms of your legal structure.
Yeah, and I would say that with ASIC, they provide a framework that is very well tested and well understood by the market, and it's beneficial to any person that's involved in this space to understand where it's come from and how it can actually help into the future for new projects.
I think it's really important that you do engage and that you do seek legal advice. And Jonathan mentioned some of the examples from the ICO boom there, which gives me a little bit of PTSD. But one of the things that I saw in that period was a lot of people who would go to the regulator and try to tell them that they were wrong. It's generally not a great approach to take. But do engage and have those constructive conversations.
Yeah, depending on your market entry point is, I would strongly advise working with the regulators through all the regulators and impact your market through your journey prior to launch.
Excellent. And Chloe, if I could pick on you for a moment, call on you. What do you see from your position in being involved in the blockchain roadmap as one of the biggest challenges for government or regulators in this space when it comes to innovation?
Innovation, I think it's a very different game than, just sort of helping to maintain existing sectors of the economy from a regulatory point of view. When you have technology-driven innovation and it's evolving very rapidly, it's hard for everybody in the ecosystem to keep up. It's not only an issue for policymakers and regulators, it's an issue for educators, it's an issue for the general public. There's a very small group of elite people in this industry, some of whom are in this room today, and it's great to see your faces, who are themselves struggling to keep up with every aspect of what's happening in the ecosystem. There's no one expert who's across every aspect of the innovation that's happening just on the cryptocurrency side, let alone in all of blockchain. So, I think it is a genuine challenge for everybody, and that's why we need to make sure that those lines of communication are open and that we're sharing our knowledge with each other as well.
And Jonathan, did you want to comment on any particular challenges you see from just the ASIC side, other than people coming to you in the first place?
Yeah, we're encouraging people coming through. I think the other thing that people need to understand is, as I mentioned in the speech, but broadly with government, is understand what the different governments are doing. So similar to the ICO method I mentioned, which you can literally trace back to like 1602, the Dutch East India Trading Company, which first did that sort of work. You need to think about what different bodies are doing and why they're doing it, so you can have the conversation in an informed way. Because it's not just ASIC, as it's mentioned, there are other bodies.
Excellent. And perhaps, Jemma, if I could turn to you next. Are you able to speak to some of your experience in seeing projects, particularly out of China and the Asia region, distinct from Australia, and how you're seeing innovation being dealt with there, particularly if it's different to Australia?
Sure. So I think, I've spent probably the last 7 years in Asia, particularly in China, and this is actually my longest stint back in Australia because of COVID. So I guess it's a blessing in disguise. So I think in Asia, I first got into blockchain space in 2017, start of 2017, right, just before the whole ICO boom. And in Asia, looking back, you'll find that there are certain jurisdictions in Asia where regulation is quite clear. So Singapore is one of them. Chinese regulation is clear in the sense that they've banned ICOs, and it's very clear on that front. But in terms of the type of innovation that I see there is really, I guess, government-driven, very top-down. So the first thing that comes to mind is DCEP, which is the Chinese CBDC. So I won't go into too much of that because I know there's a panel afterwards, but you can see how, they've rolled it out. It's been, they've been looking at research this, for probably since 2015, 2016. So quite a few years, but they've started rolling it out across 4 or 5 cities. If you have a WeChat account on your WeChat wallet, in certain cities, you can actually get airdrops of DCEP, and which you have to spend in the ecosystem, right? You spend on actual consumer goods. But I think in that sense that China's quite ahead compared to the rest of the world. And I was reading this progress, DCEP, they've initially, I think 5 cities, now they've grown into more cities and across more sectors, right? And that is largely a government-driven exercise, which it has to be, right? Because it's really the backed by the central bank, the People's Bank of China. And the other one, I guess, the second one would be the blockchain service network, which is a consortium chain or a federation alliance chain, where each city becomes a node. Right? Again, and I think the reason they can do it so quickly in China is because it's a very centrally controlled place when it comes to this sort of large technological innovation, and therefore the whole country heads towards that direction. But that is the adoption of technology, which is very different to regulatory innovation, which is still very much limited in China.
Well, excellent. Justin, moving on, when you're dealing with the almost polar opposite in the Australian economy, you're dealing with a lot of parties and a lot of different moving parts, and we don't have the essentially dictating government around certain things to roll out technology fast, which is frustrating when you can't roll out technology fast, but good in other ways. I believe it's a design feature, not a bug. But from where you sit and your experience going back, when you're dealing with multiple stakeholders who are particularly shareholders who might be on the more conservative side of things and are not sitting in a place where they're necessarily as and I don't know, but banks are not traditionally known as being hothouses as large organizations. They'll often have innovation labs and whatnot. Can you speak to the experience of having large corporates as your stakeholders in the background, and what challenges or approaches you've seen in the innovation that Lygon's done?
Yeah, you're on shaky ground, Miss. When you start that, calmed up. I can't move on this chair either. Yeah, so I mean, are banks really conservative? If you look at banks as a whole entity, yeah, you might want to call it out as being conservative. But if you then start slicing a bank up into some of the operating bodies within a bank and how they carve out the balance sheet to support their business versus changing their business, build the bank, change the bank, and support the bank, etc. So they do invest a lot globally in certainly fintech, but also in regtech, in other fields. So are they conservative relative to the insurance industry? Are they conservative relative to healthcare? Or is everybody conservative? Or are they just trying to do too many things? They don't have either the will or the balance sheet to change everything at once. So I think yes, banks are traditionally thought of as conservative. That used to be an angry about their lending. I challenge that now. But rather than their adoption and sponsorship of doing things differently and evolving as the marketplace and customer spending patterns change, I wouldn't necessarily say they were conservative in that front. I might get booed out of the room for that, but that's kind of my experience of it relative to some of the other industries and other sectors that we're talking to as well at Lygon. So I just put that out there. Now, and this my next kind of point I'd say here is, and this really kind of like just goes into distributed ledger technologies and networks, as you describe them, or ecosystem businesses. So to be able to actually get the benefit of what we're all doing, you have to develop an ecosystem, and they take time. I'm ignoring the technology challenges, sorry, for a minute, and just look at it from a business lens. You go like, how does my investment in this technology actually start to produce revenue for me, and I'm not continuing to sink cash into it? And that takes a lot of time. And in Australia, it's an interesting market because it is, and this is great for innovation rather than negative for innovation, because it's a big enough economy with enough GDP and business activity going in it to be able to fund businesses once they get going in this ecosystem. There's relatively similar spending patterns and needed in commerce, not just in banking, across the whole gamut of commerce. And that's kind of where Lygon fits in. And people call it a fintech product because the banks have sponsored it. And I kind of came into it in November last year. I'm not a founder. I got in as a CEO to commercialize it. And it was like, well, this is a commerce play. When you realize the amount of different industries that use bank guarantees, it's pervasive across everything. And the issues in this case of innovating from bearer paper certificates, which are incredibly painful for everybody, to a digital equivalent that's fully reconciled, immutably recorded and encrypted, plus the ecosystem working on it, it kind of is foundational on where you can take it to dematerialize contracts in commerce. Right? And the major shareholders of ours, which are ANZ, CBA, Westpac, IBM, Centre Group, took a customer problem and spent years working out the right technology solution and building to it, and then went live with a marketplace to deal with that customer problem. And so in that sense, they were very innovative because they were asked to be innovative by their customer base. So they have to prioritize it rather than look at all the million other things they've got on their plate as well. So I wouldn't necessarily say they're conservative if you look at it down that lens. They've got a lot on. Irrespective of royal commissions, they've just got a lot on. They're very important entities in this economy, as is commerce. Right? So they have to pick their battles.
And they would have had the additional challenges of, particularly with the Royal Commission and banks being closely watched by other regulators over things like market manipulation or collusion. So
not trying to dive into that one as well. If you also look at when you're engineering and designing ecosystems, it is for the participants. So to do that successfully, they need to come together and be enabled to have those conversations. And it's not just the the workflow of platforms. It's a legal framework of the platforms as well. And to be able to get in a room and discuss that is challenging for banks because of the way the regulations are written around them coming together and discussing exactly that. And that has a knock-on effect on how quickly you can get to market, how quickly you can finish these things, and then how quickly you can get to cash flow positive. So there is a role for all the regulators to kind of like consider how do we kind of support this collaborative network ecosystem build out, and look at it not as you're getting together in the club and pulling something off. So but that's something that I think regulators might want to consider as something that is a problem or a challenge with blockchain related technology.
So you almost have
ecosystem based.
You almost have a spectrum there where you have the business Lygon that's obviously was having a stealth period, and being very careful about the risk, but ultimately at an abstract enough point, blockchain systems, because of the network effect, are an agreed standard. And then I might invite Chloe to speak briefly on the standards point, because the other end of the spectrum would be the work that Australia's done in helping to bring open standards and published standards together to get people on the same page on using the technology. Chloe, did you want to weigh in on the standards piece at all?
Yeah, the investment in standards, I think, was one of the first financial investments that the department made in the blockchain industry. And it's been great to see that Australia's been able to position itself as a global leader in the blockchain standard space. So, we definitely are recognised globally for that in the ISO. And the other thing, that I think is worth acknowledging about blockchain standards is that a lot of them emerge organically, and the ERC20 standard, for example. So, there's definitely a need for standards. I think that what's important is that, when these standards do emerge, that people who are building in the space can think about how is what they're building interoperable or compatible with the standards that are accepted across the community, because I think you could easily lock yourself out of a market or out of an opportunity if you try to go against the grain of standards that have already achieved that kind of adoption. But there's still a need for more standards. There's certainly still questions around interoperability and how this ecosystem works from that point of view. And there's interoperability between chains, within chains, and also between blockchain networks and other networks. So there's certainly a lot of work being done, and I think Australia is continuing to play an important role.
And Jemma, question without notice, but I'm not across the Chinese standards or how much that's playing into the different initiatives you referred to. Are you able to share any insights from what you've seen?
Yeah, so the BSN, the blockchain service networks, in fact, an amalgamation of different permission chains, and that goes back to Chloe's point about trying to solve this interoperability issue, such that as an application layer, you don't really care about which chain you're on, as long as it does it has the right functions. So that's what the Chinese government wants to do with the BSN network, is to say, well, a Hyperledger, a last recorder, you can all come in and connect to this network. But at the application layer, as a developer or as a project with this front end, consumer-facing products, you don't really have to understand the full stack. All you have to do is pick, the particular section that helps your functions, right? So I think that's very key in terms of making sure that that standard and the BSN is what the Chinese government trying to push forward as the standard for anyone wanting to operate an enterprise grade application or a service in China for the blockchain space.
Excellent. Now, Kevin, you've been very quiet there. If I could call on you, just on a slightly different tack, given the amount of time you've been involved in the space, particularly around fund work, are you able to just speak to how you've seen innovation?
It's almost 4 years, but I suppose that
Feels like a
it's like
lifetime.
nothing in one industry, but in this it's like a lifetime.
Tell us about the evolution of innovation that you've seen in the last 4 years.
Yeah, well, look, non-correlated capital, tribal, we're all emerging in a traditional space, and of course, as you're in your company, you're always looking for your edge, your differentiator in the market. And we just saw an opportunity in which there is an existing regulatory framework in which we can get these new types of assets into the hands of regular people and institutions. And we just went with the angle of solving for what's already accepted in the system. The financial system in Australia works very well. I mean, the financial planning networks work very well as an industry. The instruments that are inside that industry are very well understood, time tested, and compatible with all of the different types of infrastructure out there, from administrators, from trustees, and so forth. So we thought this is the way to, tackle the problem from where we were standing, which is we were licensed. We have a framework to follow. Everybody understands what a unit certificate is, who's an investor, who's a financial planner, who's a wealth manager, who's an institutional guy. Those kinds of products can go into wrap programs, into various fund-of-fund structures and so forth. So there is a way to already speak to the system that's working and just give them a new asset wrapped in a well-understood regulatory framework. And that's what Monochrome is doing in our relationship with Binance. Allows us to say, well, if, when you're in a situation where you're surrounded by peers, you kind of sound like you're in an echo chamber. Everybody understands what you're talking about. The acronyms fly, the jargon flies, and everybody gets it. But we are actually in the minority. And most people are like terrified of the new technology. And we just came back from a discussion with a very well-established player who said, look, most of the guys that look after on the chairman of this board is 80 years old. And they think, who are these young whippersnappers? How can we shut them down? Because not necessarily because what we're doing is wrong or whatever. It's just that we understand it and they don't. So I think there's a period coming where we try and blend the old with the new. And so that's where Monochrome sits. We just want to be able to give people a way to own Bitcoin that also can sit inside their portfolio as an asset class. The 60-40 asset class days are over, as far as I'm concerned. If you're not doing a 60-30-10 to Bitcoin, then you're not accounting for the fact that the money printing is sucking the value out of your currency. And so all we need to do now to at least get that going is to be able to provide a way to own that asset without upsetting anyone, and using established frameworks to make sure that everybody who is a stakeholder in the process of investment is informed and understands it.
And I suppose in your time being in that fund space and being involved in some of the earliest wholesale crypto funds and buying into those digital assets, how have you seen the appetite for them grow in the last 4 years?
Well, we were fortunate enough to pick up quite an active trading fund called Polo, if you're familiar with them, and they have grown dramatically coming out of the crypto winter. And they've been through the tough times. There's certainly the digital fund as well. It's been through tough times, but it's an indicator that this thing's not going away. And in the end of the day, it's all about momentum. If people are happy to buy Tesla at a 1,200 times valuation, then it's not really about anything else other than people want something. And if we can't provide the thing that they want, then we're not working properly as an economist. So what we think is it's just, we're seeing a nascent industry going through the growing pains that you would expect. I mean, even Amazon had its drawdowns and so forth. But when it establishes and it becomes a serious asset class where it needs to be, we'll be there with an instrument that allows anyone from any level of technical competency to have that in their portfolio.
A quick question, I'll actually throw this to all panelists. Do you think that, say, the digital asset and crypto markets are a barometer for the blockchain industry more generally, or do you think they're disconnected? Jonathan?
I was thinking there's probably an element of both sides. There's going to be some individuals who will, particularly if they're using traditional investment vehicles, invest through certain crypto assets to try and buy into the technology as a representative investment. Other people will be able to differentiate or choose to differentiate for whatever reasons for their needs.
I think it's more of a barometer because, you know, speculation drives actually people to look at what it is about, and over time, as they speculate, some will go into, okay, what's the technology? You know, that adoption will actually flow through to the tech part as well. And just to add, actually, just to on what Kevin said before about, you know, these regulated assets, I actually think regulated, being able to acquire, particularly for funds, instos to acquire these assets with underlying product is Bitcoin or, you know, or Ethereum, is actually adds efficiency to the whole market, right? Because what Grayscale is doing in the US, it's legal, but it actually creates inefficiencies where then funds and traders, like the quant team I work with, can actually arbitrage every now and then, and that's, you know, it's, as a overall, it's great, you know, from a trading perspective, from a industry growth and market efficiency. Is actually an interim product that, you know, where ETFs come or any sort of regular products as liquid come, can actually improve the industry as a whole.
And that's referring to sort of Grayscale being at times disconnected from the price of the underlying
Correct,
assets.
because of the way it's designed, you know, it's really, you can only go one way in, but you can't redeem your Bitcoin, right? So, and therefore there's this unlocking periods of arbitrage where traders and funds, and even large funds, are taking advantage of every now and then.
I'm more with Jonathan on the description of whether it's a barometer for the technology adoption of DLT, things like that. I'd say probably about 10% of the Binance 100 that actually reflects very good engineering from a global network perspective, and the rest of it really is people either buying into marketing or buying into the underlying product and services that these firms have realized and built over the last 3 or 4 years. So there's a little bit, but you've got to kind of think about it's just underlying, unless you're an infrastructure player like Hedera, for example, right? You're building a business just on an architecture. So I try to not talk about the fundamental architecture underneath and talk about the business value proposition of what's being put on it.
Discussing the light
Chili's,
bulbs, not the
great
light
example, right? It's, I mean,
I'd like to add something to that. You know, we very much believe there are two worlds. There's crypto and there's Bitcoin. And crypto, or all of the other aspects of this new world, is coming from this thing, this new thing that's come in. What is it? Is it a business plan? Is it a reserve currency? Is it a true asset? What really is it? It doesn't really matter so much. What matters is it's the linchpin event that has created this ecosystem. And so it stands alone. And so we believe that in a world where manipulation of fiat currencies happen, it's not about innovation per se, it's about insurance. It's about protecting the value of the money sitting in your bank account. And when we see PayPal and Visa starting to accept Bitcoin payments, it's no longer about so much technological innovation. It's about saying, I'm starting as a consumer to have a choice. Am I going to put my money in ANZ and then 0% and actually lose money through inflation over time? Or am I just going to put everything I earn into a Bitcoin account? It's pretty good likelihood that it's going to earn, but at the same time, I can do my daily shopping out of it. Now, look, I'm not here to say that that's a good investment strategy, but what I am saying is that they've got the choice, right? And when you're talking about fiat currency and everyday living and finance and all that, we might be at an epoch, a change where, you know, in essence, people start making a conscious choice between my store of value. Am I going to put it in here, or am I going to put it in here? And that's what makes a society better. That's what makes economies better, is choice and competition and all those aspects.
Well, that's quite interesting, because to your point, I remember reading some comments from some central banks when central bank digital currencies were being discussed a while back about a concern of a rush to CBDCs by deposit holders that a few banks mentioned as a potential risk and why they were going a bit slower. But I see you approach it from the choice perspective being a good thing.
It's a good thing. It's always shown historically that choice is the best way to go because it creates that economic incentive that drives innovation. Why aren't we innovating our fair currency system, especially when the manipulation of it is in the hands of so few? I think historically speaking, when there's major shifts like that, they're often wide-reaching and cover so many different areas in society, not just innovation, but social welfare and so on. So, ultimately, choice is what gives us an advantage in a Western context. And why is it that there should be a barrier to choice? Well, I understand ASIC's importance. It's very important to protect the consumer, protect them from malinvestment. I mean, I'm a big supporter of ASIC. I just think that it's amazing that a lot of people talk about the regulation as being a hindrance, but not a lot of those people actually spend time reading their RG 146, all the regulatory guides. The answers are in there because the framework is it's not stupid people who put this together. It's a very well tested system. So why not at least learn from the past? Go back and understand how the financial system was built up, work within those constraints, and then slowly the new dawn that the maximalists are going to want will actually get there, and don't fight it, work together.
Chloe, what do you think of this choice as a driver of innovation?
I completely agree. And, there does seem to be a feedback loop between, blockchain and crypto. And, within the crypto market, it would seem that there is a high correlation, in that group of assets. So, I think the conversations have changed from where they were, a year ago or so. I think a year ago, there were a lot of people talking to me all the time about, where's the capital, where's the investment? There's no money anywhere. And now when I take meetings with people, particularly VCs, they're saying to me, we've got more capital than we can allocate. And, I think this is similar to what happened in the last crypto bull run where, people become very rich very quickly. They look to, reinvest that money into the economy, and where they choose to reinvest is in the space that they know, which is, in these kind of blockchain protocols. So, it does seem to be that, investment in blockchain does follow the growth of the crypto market. It's about $2 trillion US now, and certainly I think the issues that I hear about from stakeholders now have circled back to the same issues that they were talking about in 2017-18, which is back to those issues around we want to build everything right now, and we want to know if we can and how. And so it's no longer a conversation about we need money for X, Y, Z. So there does seem to be a feedback loop, I think.
Excellent. I know you're a big fan of the adoption curve and economics, as am I. And I'll ask you to go first, but then I'll ask everybody to comment on where they think we're at from a blockchain perspective on the adoption curve. You don't have to be as close to classical economics on the adoption curve if you can, but if you don't want to.
Yeah, I sometimes feel like we're living in two worlds, right? A lot of the people in this room, we talk to each other every day and we feel like everything's really obvious and that all this stuff is inevitable now and it's here to stay and it's growing at a dramatic pace, and we're just waiting for our friends and family to catch up. And some of them are, and they're texting us about Doge, and there's all kinds of madness. But on the other hand, sometimes it feels like, why does it feel like we're so early? We're so early. And I think, there's two things in there. One is that the pace of growth is just unbelievable. And, we were talking earlier about the fact that it's so hard to keep up with all the changes. And so from that point of view, I think it's quite clear that there is a lot of energy being poured into this space, just in terms of raw talent, as well as capital, interest, media attention, everything like that. But I think if you take a look at history, if you take a look at what have been those transformative technologies and movements, over civilization, these things do play out over decades. And it tends to take decades to realize what the true value is of something that is a kind of 0 to 1 technological breakthrough. And when Bitcoin was invented, digital scarcity was invented, and that was a 0 to 1 innovation, and, you know, quite remarkable. It's honestly a miracle that it worked, but it's here now. And, you know, what does that mean for, you know, as we've been saying, it's kind of, what does that mean for our money? What does that mean for our infrastructure, for, you know, our whole economy and our society? I think that, you know, we don't know where all of this necessarily will go, but that's where you get creativity from. That's really what innovation is all about. And so I understand that, you know, sometimes for people it's very frustrating because they want all the answers and all the results straight away. But I think the reality of innovation and the adoption cycle is just that it is a mystery, and it's also up to people to decide what they want to put their effort in, what they want to build. I think one of the opportunities that Australia has is, and this is coming back to some points from before, we are a big enough market that there is a customer base and there are investors, and we're also a market that is located in close proximity to much bigger sources of customers, and that provides a really fantastic opportunity. But at the same time, we're a small enough economy that if there's, you know, some kind of major firm that gets established in, you know, the US or Europe or whatever, they don't necessarily think of Australia. They're not, it's not at the top of their priority list to say, okay, cool, and now we're going to set up a base in Australia. And so that means that we get to be the ones to build our own products and our own businesses that solve the problems that we have. And so bringing those new products and services online and then being able to export them into the region, that's the opportunity that Australian builders and investors have. So recognizing that we are very, very early still in all of this, I think that, you know, this is the right time to be kind of asking the questions about, you know, what are the things that we need, and we should build them for ourselves.
Kevin, where do you think we're at on the adoption?
Oh, well, look, it's anyone's guess, but I would say that for me, that's the way I feel about it. But, and you probably get different people having different opinions, but I sort of follow the very simple premise. And I think George Soros was the guy who first coined the phrase reflexivity. But the concept that it's all about momentum in the end. It's all about taking interest, seeing if it continues, seeing if it compounds on itself. And if it does, then it'll start to form a feedback loop. And that feedback loop is very hard to reverse. I mean, the simplest expression of that is trend following. You know, but at the end of the day, adoption is underway. The timeline is, you know, someone will say it's 2 years, someone will say it's 50 years. That's fine. But the momentum is a constant. And I have no doubt of that now, because if you go from a trading perspective and you go and look at any exchange, especially Binance, and you look at the Bitcoin price, and it's 10 million up on both sides and it's a cent wide. You know, what that means is people are playing, and that's all you really need, right? And then that momentum will carry it through. If people are interested, it'll be adopted in its way, in the way anything gets adopted. You know, slowly, fast, sometimes it goes very quickly, sometimes it's very bumpy. I mean, Amazon, I keep thinking about Amazon, but they've had several 70% drawdowns in their time. They were $1 billion company with no revenues in 2000. I used to trade it, you know. But the fact is it was a good idea and people use it all the time. And as long as that's there and the prices are right and the liquidity is there and there's participation, it's growing and it's only going to get bigger. And
Jemma, where do you see Australia sitting, particularly given your thanks for staying longer here than we're turning other scenes. Where do you see us sitting, particularly with regards to your experience in China?
I think the adoption, we're very early on. Like, you know, I think from a look at price, okay, we think, oh wow, you know, we've you know, from peaked or whatever, right? But I think from if you zoom out on that S curve, I think we're just starting to, you know, go slightly exponential, but just starting out. I think and the way I look at this is look at rather than price but look at the infrastructure, right? Decentralized finance, that's just starting to take off. All the infrastructure in the traditional world can be replicated on blockchain in a decentralized way. That is, you know, that's just starting off, right? Probably got 10, 20, 30 years before we even, you know, become mainstream in terms of decentralized finance. And then things like the financial markets, In the traditional financial markets, options, derivatives drive a lot of the volume, a significant portion of the market activity. But in the blockchain space, crypto space, options probably just started maybe a year and a half ago. I remember first trading options about a year and a half ago in Bitcoin, and the arbitrage was amazing, right? And just that was telling me, goes, wow, this is so early. Now, yeah, arbitrage is diminished, but still, but the volumes and this portion of trading volume of the whole space is tiny, right? For me, that's we're probably, I would say, at least, in terms of mainstream and the prevalence of grayscale and more ETFs coming on board, that's just starting out, right? In a mature market, there should be lots of them, like, it should be overcrowded, but this is just starting out. So I think we're away from mainstream adoption and maturity in this market, and that's why it's so exciting to play and be in this space, because of the opportunities and the potential, right? Once it becomes mainstream, what you can imagine that from now to mainstream, I think it's still a fair way left.
And do you think from a, I suppose, innovation race, where do you see Australia? Do you see it sitting behind, ahead of China, or different?
I think from Australia's perspective, it's very, blockchain is a global day one product or network, right? Which for a small market Australia, this is perfect. Because that means you don't have to, when I did my first startup in edutech, you have to get on a plane and start to the China market, right? You have to move there and raise capital there. Now you can sit in Sydney or Melbourne and do very good products and networks, and it's global day one. In fact, I think someone on Twitter wrote, from 2017 to now, if someone just, invested in Australian projects, and there's about probably 10, 15 of them, regardless of good or bad, just blindly investing in them, they would have done probably 20 times better than the price of Bitcoin from 2017 to now. Right, and I've personally invested in a number of good Australian projects in Sydney and Melbourne, who, teams very small, but great technology, great use case, very niche, and they're well and truly global companies, global networks. So I think that's from a product technology perspective, Australia is actually leading the way. And most people don't realize these projects are Australian. They naturally assume comes out of Palo Alto, comes out of Toronto, but comes out of Berlin. But really, the founders are based in Sydney and Melbourne. Yeah.
Justin, did you have a comment on?
Just going back to the adoption question,
Yes.
if I may, if we're talking about the adoption of digital assets, then in Australia at least, it's a long way to go for the large super funds and their trustees to be able to even mandate setting up a more short-term fund to be able to invest in higher volatility or more volatile assets. So that's a long way off, to your point about explaining to trustees. Not too sure if you're late or not, but the investment thesis is difficult for the super funds to have their trustees sign off it and then build the technology to enable them to invest in it and understand the custody side of it and the risks. So that's quite a stretch, I think.
It's illegal as well, right? I mean, there's no law.
Yeah.
So good.
And then go back to and where is it traded and how well regulated are those markets and how well regulated is the price formation on those markets to enable fund managers to invest in that. That's a step change for a lot of fund managers in the super funds, for example. I know they want to, but the frameworks for them is difficult. If the adoption question is about the technology adoption around blockchains, which we're here to discuss, there is a litany of good projects, to use your words, pilots, etc., that have not made it to commercialization. And they've not made it to commercialization because technology is hard. It's quite easy to build a pilot on a distributed ledger platform that doesn't have a lot of throughput requirements on it. But when you start doing this in private and public, or a mix of private and public ledgers, it then becomes even harder to build that technology. So you need to have the conviction of your shareholders and the market and your staff to get it done, because if you're going to run out of money, that's why I thought the ICO period was so important for this architecture to get off the ground, even though I don't think most actually invest in the architecture. They just raise the funds using it to be able to have any kind of chance of building a profitable ecosystem or a marketplace, which is what it's really designed with. One of the best use cases for this is a marketplace, multi-party, has to go on board them all on. It's difficult.
Excellent. Now we are running close to time, so I thought I would ask each of you if there was one thing you'd like to see happen to help blockchain innovation in Australia, be it cultural or market or regulatory, what would that be and why? Jonathan, you've been a little quiet on this side.
I have.
Other than
packing it
making you chairman.
side. Besides making the chairman, which is interesting, there's going to be a lot of drive around what people need to do and understanding it. As I said, there's on the momentum point, for example, there's a lot of people who are interested in this area. Look at the hype cycle and overlay that with the economic cycle. It's another consideration, and also be mindful in this space that you are disruptors who can be disrupted. I have seen entities coming into the innovation hub previously who are now trying to disrupt entities I've previously spoken to. So be mindful, this is a very competitive area, and I think that in terms of what we'll see is an increase in competition, and that will be what drives a lot of interest in the space.
I think more regulated products like ETFs or investment products where the underlying asset is very simple, but that helps it to put these products in front of mainstream funds, right? In super funds, endowment funds, instos, who otherwise cannot invest in something that's great. And I think that will then really get, because innovation comes from people having attention to this, having a properly regulated financial products or many products helps to draw attention, and that will in turn drive more talent, more engineers to focus on, okay, well, let's look at the underlying architecture. Let's look at, what are the other ecosystems we can play in for blockchain.
My number one would be to get the legislation done and get the law properly finished, because to your point, the perpetuals of this world, their hands are tied until literally something comes up in front of a judge, for example, and there is a decision made about what are we dealing with here. At the moment, it's still too ephemeral for large institutions to even be able to engage with it, and not like you were saying. The appetite's there, but they also want to keep their jobs. They also don't want to have a scandal that's going to be damaging to their brand. So at the end of the day, we need to have a stronger framework from government.
Oh.
So one of the issues there, as I see it, is, how do we make these new products and services safe and accessible? And the point was raised earlier about, people who are not in this room who are quite terrified of the new technology and don't know how to navigate the disruption. So, I think that from my point of view, it's a collective effort. Innovation requires a multidisciplinary framework, and so to the extent that I think everybody in the industry, in the ecosystem, can have a think about what role they can play to help break down some of those divides and make sure that the technology is safe and accessible. I think that will be a really important thing for building trust moving forward. It's yes, there's always going to be questions around, how do we interpret a principles-based framework and things of that nature. But I think that there's a cultural aspect to this as well. And so that requires everybody to understand what is their own leadership role within the community.
Thank you. Justin, you have 20 seconds.
20 seconds. Make that 15. Just a couple of things. One is that I think industry bodies have got to come together and do it on an industry basis or a sector basis. We would never get off the ground if we didn't have a standard that's been put together by the banks who agreed the legalese around a bank guarantee, digitize that, done. I think the same's got to happen if they come together and like insurers saying, can we replicate that with you guys, and like healthcare, so health tech, reg tech, fintech, keep going, prop tech. They've got to kind of like come together and look at it like that and all try and move together as best they can to be able to adopt this, to shorten the adoption curve of these services that we can improve on by using a better architectural layer.
Yeah. Excellent. Well, thanks so much. We're just heading up out of time now. If you'd join me in thanking our panelists for giving up their time generously. Thanks so much for coming on. We'll now, and thanks so much for joining us.